let's welcome our market master for the day. Dipen Sheth, the head institutional research at HDFC Securities, joins us. Well, before I come to the two excellent stocks that you have picked up, Dipen, what's the market looking like? There is a dash of pre-market, a pre-budget rally still unfolding, you think?
So the disclaimer here is that, Lata, that short term is always very, very dicey to predict. The momentum is on our side, surely on the side of the bulls. Valuations are now looking a little, if not stretched, at least adequate. There is hopefully a lot of new initiatives and actions to be taken in the budget, which should set direction for the next few months. But there's a storm brewing in Europe. There's all kinds of funny macro-eco developments and geopolitical developments happening around the world. So you might see a little bit of money being pulled out, and that could lead to, so FIIs own a huge chunk of Indian equities, and every time they are net sellers for an extended period, you could have a problem. The good news is that big money has started flowing into domestic mutual funds, and that should mitigate, if not manage, a large exit should it happen for a while, the FIIs. I'm constructive. I'm not really. So there's also this side theory on, that the 3Q numbers have been uninspiring, and there's a year-on-year decline and at the aggregate level, people put together performances of companies, and it's not important where you are. It's very important where you're going, especially when where you're going has been so brilliantly been redefined. So I'm not too worried about the 3Q let off.
Okay. Dipen, hi, good morning. Let's talk about some of the stocks you've picked up. The most interesting one is Suzlon. There's been a crisis of confidence in the stock for very long, but now with such a credible investor coming in, would you recommend this stock for a long-term investor? Because this is something that has resulted in a lot of wealth destruction over the last many years.
I think that's a very fair question to ask. Suzlon has, if I may say so, at the risk of sounding like a bear on Suzlon, it has systematically destroyed shareholder wealth in the last few years by systematically destroying its core business through a series of reckless decisions and bad capital allocation, and a good acquisition which got messed up because of the covenants around that acquisition, huge over leveraging of the balance sheet in making that acquisition, and then not being able to integrate that acquisition, which is RE Power, or Senvion as it was then, as it's now been called. A lot of these excesses and old sins are now being progressively washed away. So there was a time when nothing was going wrong, right for Suzlon, and it looks like everything is now going right and nothing can go wrong for them. So, we've come a full circle. There's been a diametric and radical shift in the business prospects, in the balance sheet, and indeed in the promoter DNA. So while one has the highest regard for the dynamism and growth appetite that Mr. Tanti had shown for all these years, the fact is that he over leveraged the balance sheet, and it looked like, in retrospect, with the wisdom of hindsight, we could say that he went overboard in leveraging the company and with his global ambitions. To my mind, it looks like the Dilip Shanghvi family and associates coming into play with an 1,800 crore odd infusion, that's close to about $300 million, is not only going to bring in money and deleverage the balance sheet substantially. So, you've got 7,000 crores of deleveraging happening with the Senvion divestment. But most important, we are in the midst of a DNA change in the way the company is run. So it's got a huge fixed cost structure. It's got regulatory headwinds that it ran into over the last few years when accelerated depreciation and green benefits were withdrawn, and everything is now coming right for them. So the new government is saying we need to increase installations of wind power, especially so renewable energy, and particularly wind power. And what have you? Dilip Shanghvi walks in and says, "Listen, we won't only do wind; we'll also do solar." Now, can they do solar? What have they ever done solar in the past? No, but there's some element of faith in the new promoter, or the new promoter associate who has come in. I think this is a time not to look at the immediate numbers of Suzlon. It's a little bit like India, we were messing up big time. And then suddenly you have this big iconic leader in charge. And I hate to draw parallels, but is Dilip Shanghvi the Narendra Modi for Suzlon? It sounds a little outrageous to make this.
No, it's not that. Tech Mahindra took over Satyam. And
exactly.
Exactly. I can even remember.
Dramatic. And now the government is saying we need to increase wind power installations in the country. Suzlon's domestic sales were less than 1,000 megawatts. I'm saying at 1,100 megawatts, it can break even. And what if Mr. Shanghvi gets a fix on fixed costs and brings them down further? At 1,400-1,500 megawatts of annual volumes, Suzlon will be a money-making machine, and then paying down debt, adding to market cap, all those beautiful things.
Well, actually, he's given credit enhancement for working capital loans, which means immediately they're getting working capital. Now, that's, I think, and who would not trust Dilip Sangvi's word? So,
absolutely.
I mean, I take your point.
There's dramatic healing, and that healing is now backed with a whole lot of steroids.
Fair enough. So that's Suzlon is your first stock. The other stock you have for us is MCX. Why?
Again, Lata, MCX is a company which at one point of time was going through severe perception issues. It's in a wonderful business. We'll come to that in a minute. But on perception, so it was part of the FTIL group, and after the NSCL blow up, there was a complete breakdown of faith in the group, and beautifully enough, the FMC stepped in and ring-fenced this business because of the strategic and national importance that it had. I repeat this, it has a national importance as a commodities bourse. It has a national importance which is unparalleled with that 80 or 90% kind of 80-85% market share today, even in total commodities futures trading in the country. So this company was ring-fenced from any unmanageable fallout of the NSCL fiasco. It was promoted by the same people, so they were forced to exit over a period of time. And as in Suzlon's case, suddenly there was a change in the DNA, or at least the perceived DNA of the company, when Kotak Bank picked up a 15% stake, not to mention other signature shareholders who got into the stock at various points of time. I think it's also very important that the operations of the exchange were not affected during this meltdown, given the fact that the software engine was provided by FTIL, given the fact that there was a big perception issue around what would happen to outstanding trades on this exchange. Business went on smoothly, as if no promoter change had happened, and as if, in fact, the promoter change helped to inspire people to stay on with their exposures in the exchange and continue to trade. So that transition was well taken care of.
So what are the price targets for both first MCX, then Suzlon?
We don't have, Suzlon under coverage right now. We are releasing a quick visit note of sorts on them. It's difficult to model the company right now because post the Senvion divestment, we'll have to take a look at the balance sheet and what kind of. So I suspect after the 7,000 crore write down, or whatever 6,000 odd crore write down that they took on Senvion, you'll probably have to look at net worth completely differently now. And so a little bit of modeling issue does persist there. Also remember that Senvion also had its step down subsidiaries, and even after this divestment, I dare say Suzlon will have 20 or 30 subsidiaries which will have to be incorporated in their financials. So it's a little difficult to get a fix on that monster. On MCX, I think the price target that we've published, we have them under coverage. We released we initiated on them recently, and they declared their numbers last Friday as well. I think the price target is less important. What's important here is that you appreciate certain fundamental characteristics of this business as it exists now. So one, there is non-linearity. The size of the business can be a multiple fold from where it is today. Now, there aren't too many businesses in India which can become 10x, 20x from where they are today. In the foreseeable future. So telecom was like that at one point of time, software was like that at one point of time, and so on and so forth. These new age businesses look like, so an e-commerce business.
In fact, talking about some of these potential businesses, as we speak, Prime Minister Modi is addressing the media at the Aero show in Bangalore, and he's talking about doubling output in defense manufacturing. Any defense stocks that you would look at?
So all the guys who have a finger in the defense pie are very, very interesting. And if you look at their numbers, they don't. So you can't do a spreadsheet kind of investing here. You can't analyze their current profit rates or assume a 10-20% growth rate and then look at what kind of forward multiples they are trading for. Remember, these are not secular businesses. These are deep cyclicals. And in fact, there is a structural shift which is being unleashed right now. So if you look at a Bharat Electronics, again, we don't have them under coverage. You look at an Astra Micro or something like that. People of defense, these businesses can grow 5x, 6x in the next 2-3 years if things play out to their advantage. We don't understand these businesses, which is why we don't have them under coverage. But I would take the point that we really need to dig very, very deep into some of these.
Fair enough. It was a pleasure speaking with you, Dipen. Thank you very much for joining us with 2 gems and a few other ideas on what investors can look for. Thank you very much for joining us.
Bye.